What I really like about footprints, it's been around for 5 years. The concept has been around for 5 years. However, it's not widely utilized or applied. Why? Because most people probably don't understand how to utilize it. And that comes, if you watch last week's mentored session, it was all about trading tools. And the whole session was based on the idea that the mistake we make as traders is we look at a tool for a strategy, right? And we reversed it last week. We said, well, actually, we have a strategy and we utilize the tool for the execution, for the application, all right? So strategy comes first, then we utilize the tool. All right, remember that. Okay, so let's get on to the topic here, all about footprints. I love footprints. Now, if I'm going to summarize, I did a webinar with IO Futures last week. If I'm going to summarize where footprint sits in the spectrum of leading versus lagging information, okay, it sits directly behind price. So what do I mean? You all know what a moving average is, okay? Moving average is a long way behind price. Why? Because it's an average of price, right? Whereas we have price being the most or the quickest piece of information. Why? Because it's exact, it's happening all the time. Just behind that we've got footprint, and that's why I love it, okay? Because for me, price is too quick. I'm not an algorithm, I'm not a computer, right? I don't say A plus B equals C. By that very nature, just paying attention to price is a bit too quick for me. Now, of course you can develop strategies just utilizing price. That's what the price ladder course is all about. And you can utilize create very successful strategies just with the price ladder. Okay, for me as a trader, however, I'm a little bit more of a position trader or whatever you want to call it. So ultimately I need something that's a little bit slower. Now, what's lovely about a footprint is it's a summary. That's all it is, guys. It's a summary of what has occurred most recently. Whether I want to see that summary in 10 seconds format, 1 minute format, or rotational format, it is a summary. It's a beautiful summary. And it paints beautiful patterns that you can learn to interpret. Now, what I'm going to do with you today in the session is I'm going to show you what a footprint looks like. Okay, so let's bring it up. Let's make this a bit bigger. Right. Johnny, how do I get this bigger? There we go. Okay. So what I've got up here for you, and I'm gonna actually just first go through the basics before I come back to the crux of it. Okay, can you all see that okay? That doesn't look very nice, does it? Can we get that nicer?
It's probably the resolution once you've zoomed in.
Okay, let's get that not so nice. Let's go backwards a little bit. Johnny, can you sort of just make this up for me so I'm going to keep going? Okay, so the basic crux of it. Every one of these is a rotation. Don't worry about the numbers for now, right? So every one of these little straight line up, straight line downs is a rotation. Now you can set those rotations. You can make it time-based, you can make it rotation-based, right? The important thing to understand is that within each one of these rotations, there's information being summarized. Now, we look at that information as it's occurring and we develop various strategies. Okay, so just the basic understanding. Don't worry if a little bit of this goes over your head and you don't understand at all. That's not the purpose, right? It's to give you a little introduction. So, at every single price here, every one of these little rectangles, I'm going to draw on the side here. Every single one of these rectangles has got two numbers. So let's say 300 and 200, right? And it's got little times in between. Now, what that's telling us is when we got to, let's call it price number 26. Someone at price number 26 sold 300 contracts, and at the same time, someone bought 200 contracts. Okay, so a buyer bought 26 contracts, but a seller sold 300 contracts. Now, we call this a footprint. It's like a scent. Someone leaves their smell all over the market. Now, what you want to learn to develop with the footprint is the interpretation of two concepts. One, initiative, and two, responsive behavior. Initiative is where someone takes the initiative. So a buyer steps into the market and he initiates a buy order through the market. So what would that typically look like? Well, let's say I'm a buyer, okay, and I step into this market. And I've got price 7, 8, 9, and 10 on the left, right? Now, there's a number of ways I can lift this. One, I can be super aggressive. And I can go lift the 7, lift the 8, lift the 9, lift the 10. Lift whatever's on the offer. And that'll look a little bit something like this on a footprint. You'll have a 0 times 200, maybe a 20 times 200. Sorry, I must write this all out for you. Maybe a 50 times 300, and maybe 100 times 300. Okay? So we can see as the buyer steps in and he starts to lift the prices 7, 8, 9, 10, right? He takes all the liquidity from the market. Yes, of course, there's a little bit of selling coming in at the same time, a little bit of algorithmic activity, whatever it may be. The important thing to interpret on a footprint is what we call the imbalance. All right, the imbalance is nothing more than the difference between, I was trying to use a fancy word there, the difference between what the buyer is doing and what the seller is doing. Okay, so you can see here, the difference on every price is that a buyer buys 200 and the seller sells nothing. On this price, a buyer buys 300 and the seller sells 20. On this price, a buyer buys 300 and the seller sells 50. Okay, so it creates an imbalance. So that's all you've got to think of it. So the interaction, how is the buyer and seller interacting as price moves? That's what it is. That's what the footprint ultimately is. Okay, let's say it was slightly less aggressive. So price still goes up, so we can still see this bar moving up. But let's say it was slightly less aggressive. So let's say we had something like 200 times 200, or 300 times 400, or 250 times 180. Okay, so you can see the nature here now. There's a lot more two-way interaction between the buyers and sellers. That's the basic premise of what a footprint tells you. It tells you the interaction in a summarized format. Now, my question for you is, how is this useful? Why is this useful? How can we develop ultimately a strategy for success? And that's what today's session comes down to. So, in order for you to go away with some sort of a takeaway from today, some sort of a strategy, some sort of a, okay, I know what direction I want to go in with this idea of footprint. I've got a chart up. Okay, and I'm going to scroll to the top here, and I'm going to give you a few dates.
I think it was just the first one was a bit blurry.
They're all quite blurry, mate. Anyways, what you've got in front of you is the gold. Now, I like this chart because it's particularly good on the footprints. It looks particularly tidy on the footprints, but also because gold moves so bloody fast, I need something to summarize information for me. Okay, so again, straight away, the question I'm going to get is, can I use a footprint in this market? You can use a footprint in any market. You can use any tool in any market. Some tools tend to work slightly better. Why? Because a tool is nothing more than a tool. It's there to extract specific information. Okay, listen to me carefully. So a tool is there to extract specific information. So make sure when you put any tool on a chart, make sure you're putting it there not because you want to identify something, but because you want to extract information. Right? I have a moving average on my chart, on my volume. Why? Because I want to see what is the average volume over a period of time. So that if there's a big deviation from that volume, I can note it quite quickly. All right. Make sure when you add a tool, you're adding it for a specific purpose. So, you have the gold daily. Right? When you go away, I want you to go get this up. And there's 3 dates I want you to look at. The first date I want you to look at is this date over here. Okay, so again, apologies for this. It's not the nicest looking chart. Right? But you can see ultimately there's a downward sloping trend line in the gold. Right? So the first date I want you to go look at is that break point. And we're going to look at it as I go through the footprint. Okay, so it's the break point, and it comes. Is there no way we can get a better chart of this, Johnny?
I think it was just the. Did you just do?
I can't even see it on there. Okay.
Can you see here the top one's blurry?
Yeah.
But this second one down is better.
Okay.
See what I mean?
Okay.
So.
Okay, I'll scroll down. That's cool. We'll go through that one.
Just look a bit blurry, but the other ones.
Okay.
Some look good.
Well, we'll use the middle one. That's fine.
This one?
Yeah.
Okay, that's better.
Okay. Apologies. So let's go back to that top screen, guys, so I can give you the dates. Then you can get this on your own time. Okay. So the first one I'm looking for is this break point over here. Right. It's the break of this triple top, long dated top on the market.